You need some.
Good afternoon, everyone. Welcome to this new series, which Mirae has come out with. And in this new series, we'll be talking about market review, as well as we'll be reviewing some of the funds which Mirae Asset has launched on the passive side. So, idea is that we will talk about what has happened in market in last month, especially. We'll go back probably a quarter or so and talk about what has changed in the market, what has happened in the market. Especially these days, there are so many things to talk about, but we'll focus mostly on the movements of the market. Okay, and then we'll pick out few funds which either are performing or not performing and talk about what is happening on that side. Okay. The idea is obviously to give you a broad overview about market and funds. Apart from this series, which we'll be doing every month, focus product of the month, which will be around 15th of every month. And then we'll be also doing a fourth nightly series on Twitter, where again we'll be talking about market. So these are three lineups which we have launched, where we'll be talking about products per se. Now, before any further delay, let me start with the market reviews and the fund review. And since we are doing this for the first time, this series, please give your comments in the chat box. What you like, what you didn't like, and is there any other information which we can add on in these sessions from next month. So this will be a monthly series. We'll be doing it on the first working day of every month, if not the second. Now, the first slide itself talks about the indexes, the domestic market indexes, and how they have moved in last 1, 3, 6 month, and how much they have fallen from their 52-week high. Right, market is extremely volatile right now. It has corrected significantly. If you remove COVID, we had seen these sort of correction in large and mid cap space in 2000, around 2018 or so. So for a lot of people, I think Amphi came out with data that almost 50% of portfolio holders in the MF industry have come after 2021. So or since 2021. So a lot of people are seeing these drawdowns for the first time. So this particular slide talks about what movements have taken place. So obviously, let's look at performance first. Nifty has fallen now down by 15.8% from its all-time high. Mid cap is down by 21%, and small cap is down by almost 26%. Now, one very interesting thing to note is that most of the fall in mid cap and small cap has happened this year itself on a YTD basis, because if you look, out of 26% in small cap, almost 22% change has happened this year itself, right? Similarly, in mid cap, almost 20% of fall, 21% of fall, 16% has happened on a YTD basis. So before the start of the year, all the indices were falling equally. In fact, Nifty was falling a bit more than mid caps and small caps, and that was a conversation which was going around at that point in time. But since then, mid cap and small cap have faced significant drawdown. In fact, mid cap has fallen 16%, small cap has fallen 22% year till date, and that's why now we are seeing almost 20% plus correction in both mid and small cap space, whereas Nifty is around 16%. One very sorts of uh, volatile segment has been next 50. For people who don't know what is next 50 is large cap is 200, 100 stocks. Top 50 is Nifty 50. The remaining 50 large cap stock is next 50. So that particular index has fallen by almost 26%, right? So it has fallen, in fact, more than what small cap has fallen, right? And if you would have looked at its performance almost 2 3 weeks back, it was the worst performing index across in broad market categories. So a very poor performance from the next 50. Again, we'll talk about it. So these are the broad indices. If you look at Nifty 500 level, which captures all large, mid, and small, it has corrected by almost 19%, which is pretty intuitive. Large cap is down by 16%, mid around 21, and small cap by 26. So Nifty 500 represents all of these segments, so it is down by almost 19% or so. Now let's look at sectoral level corrections. And from a sectoral level point of view, what I can say is whatever had from a valuations point of view and from a momentum point of view ran up significantly till 2024 or till September 2024 has fallen the most, right? जितने भी segments थे, sectors थे जो कि काफी काफी ज्यादा exuberance दिखा रहे थे, काफी फ्रॉकीनेस दिखा रहे थे, उन सारे सेगमेंट्स में एज एक्सपेक्टेड ज्यादा करेक्शन आया है. सो more than 30% corrections you have seen in utilities, in power, even in PSU Bank, also in media and reality. So if you remember, these were the PSU segment, PSUs, energy, power, media, reality, etc. were these segments which were doing fantastically well. They had run up very quickly, and there were a lot of debates about valuation of certain PSU names, especially, and they have corrected the most, and that is where you can see the red sorts of marking in the drawdowns, right? So again, 30% plus. Yeah, it's power, it's PSU Bank, it's PSUs, it's energy, media, reality, etc. And please remember these segments because जब हम लोग अंडर परफॉर्मेंस की बात करेंगे about alpha and next 50, you will sorts of end up correlating of what is happening at these sectoral level and why the same thing is getting replicated in momentum, alpha, and in next 50 products. Now, what has fallen around 25% again, the segments which were sorts of doing really well and had some sort of, let's say, reasoning behind it, right? So they have fallen, but not have fallen so much. So you look at capital goods, you look at which is down by almost 26%. Look at auto, which is also down around by 25% or so, right? What has not fallen? So you have power, PSUs, energy, reality, media falling by more than 30%, and then you have these capital goods, manufacturing, auto segment, which obviously from a PE point of view were elevated significantly, and that's why they have come down to by a margin of let's say around 25% or so. What has not fallen, and while वो green में denote हो रहा है, but all of those have fallen but fallen less, is banking and financial services. Again, if you remember, those were the segments which were not doing well. So bank and financial services चढ़ा भी कम था, and that's why they have lost also less. So your banking is down by almost 12% since its 52-week high, and financial services is down by almost 9% since its 52-week high. Private bank is roughly down by almost 12% since its 52-week high. And comes IT is around 18%, and pharma. So whenever we talk about a bit on the sorts of defensive side. Pharma fell by 16% only. So, which is somewhere around where Nifty is going. But very important thing about pharma, which I wanted to highlight, is that if you look at pharma and if you look at, let's say, BSc Healthcare, which is this fourth last one, you can see that it has fallen by 16%, but out of that, almost 15% fall has happened on a YTD basis, and that's because most of the negative sentiments about US tariffs. I think that was a point where sorts of a lot of correction started happening in pharma stocks also. So even in NSE Pharma, which is down by almost 16.8% from its 52-week high, 15.1% happened on a YTD basis. So this segment is the only segment which had not fallen so much, let's say a month or so prior, but it has fallen now significantly because of obviously US tariffs, etc. Now let's look at, so we'll talk about valuations also, but very quickly, because of this, valuations have somewhat come across to be pretty reasonable. Nifty is somewhere around 18.5%, whereas the 10-year average is around 19. So now Nifty is trading at a discount. Mid cap also, if you look, the best PE is somewhere around 28.35, somewhere around 10-year average. If you look at small cap, 20.28, somewhere around again 10-year average of 20.11. So your broad-based indices have started to come around their 20-year average. Nifty is now at a discount. It has been on a discount since a while. So having said that, if you look from an absolute basis, you'll see that mid cap still is trading at around 28.3 PE multiple, which, if you look in an isolation basis for a segment, looks on the higher side. So you have Nifty around 18.5, mid cap around 28.3, small cap around 20.28. Now, just one clarification which I like to point out, that in India, comparing PE with historical PE at times may not make sense for few of the segment, because companies के transitions बहुत होते हैं, right? There are certain companies which comes with a very high PE and can deviate those observations. For example, we'll talk about it that Geo Financial and Zomato are going to get included in NSE. We can debate about the reason behind it, and I'll discuss the reasons behind it. जिससे निफ्टी का PE, because Zomato and Jio are at a very high multiple, PE काफी inflate हो जाएगा, right? और फिर लगेगा हम लोगों की निफ्टी is at a premium, but that's not true, right? Because it's probably for the first time that these new age companies are becoming part of the Nifty 50 portfolio. They trade at such high multiples, because of which Nifty का PE inflate हो जाएगा, and then probably Nifty का PE का comparison with a 10-year comparison may not remain fair. The reason why I'm telling that is that same thing happens in Next 50 also. अभी Next 50 का PE, which is the second line, looks around 17.5, because there are a lot of PSU companies which are part of Next 50. A while back, it had lesser exposure of PSU companies, more exposure of these new age companies, mid cap companies, etc. So take it with a pinch of salt, just because probably like to like comparison will be when you look at all the underlyings, look at their individual PE, and then arrive at a conclusion whether the portfolio is fairly valued or not. Index level PE comparison can throw different numbers, right? Because of probably data changing so much that current PE is not comparable to historical observations. But having said that, Nifty ka PE is around 18.5, looks around 10-year average, below 10-year average. Same is the case with small cap now, and same is the case with mid cap. अगर हम थोड़ा sectoral level पे जाते हैं, then the story obviously is now returning after so much of correction to bit more comparable level, where we see that जो पहले केस था वो अभी उतना नहीं है in terms of overvaluation. There are some segments which are still very highly valued, like BSC Consumer Durables is best P is around 53 compared to its 10-year average of 40. Then you have let's say numbers like on the contrary side, you have Nifty Bank, which is at 11.8 PE, which is much lower at discount compared to its 10-year average of 17.1. So yeah, these are the valuation numbers. We'll talk about a bit more. But now let's talk about stock level drawdowns, because this is very significant, right? Because just look at this data. Nifty 500 has corrected by 19%, right? And large cap down by mm, Nifty 50 down by almost 15-16%, mid cap down by 21, small cap 26, right? Everyone remember that number. But if you look at the stock level data, so ये मैंने क्या किया है फर्स्ट टेबल में, इट्स अ 52 वीक हाई से क्या करेक्शंस आए हैं. So in Nifty 50 itself, there are four stocks which have corrected more than 40% from its 52-week high, and that is how I read this number. There are 12 stocks which have corrected more than 52-week high. If I look at data at next 50 level, and that is why you will understand why there's a bloodbath in Nifty next 50, that there are four stocks which have corrected more than 50%. There are 15 stocks which have corrected more than 40%. There are 34 stocks which have corrected more than 30%. Right? So there are significant number of stocks जहाँ पे drawdowns have been significant. अगर आप overall large cap पे देखेंगे तो out of 100 large cap stocks, 46 large cap stocks have corrected more than 30%. Now, if you go towards mid cap, I'll talk about alpha later. Out of 150 stocks, 10 stocks have corrected more than 50%, 96 stocks have corrected more than 30%, 42 stocks have corrected more than 40% or so. And if you look at a small cap and micro cap, so what is small cap and micro cap? Rank so 250 small cap stocks and 250 micro cap stocks. That is how I've taken it. So मैंने all cap index लिया है. Top 100 is large cap, next 150 is mid cap, and then 250 is small cap and 250 is micro cap. So those out of those 500 small and micro cap stocks, 113 stocks have corrected more than 50%. 257 stocks have corrected more than 40%. So we are talking about more than half of small and micro cap 500 stocks, more than half of those stocks have corrected more than 40%. And that is where the pain is right, because index level small cap is only down 26%. But if you're looking at a small and micro cap at a stock level, you're seeing that all more than 50% of stocks are down by more than 40% from its 52-week high. Similarly, if I'm looking everything, small, mid, large, micro, out of 750 stocks, 318 stocks have corrected by more than 40%. And that is where obviously a lot of pain for the retail investors especially are. And that is where a lot of these sectoral indices, these factor indices have not done well, because the drawdowns have been significant if you are looking at a certain segment level. I've also given a YTD level data just to highlight that these sort of corrections are continuing. On a YTD basis itself, लार्ज कैप में 15 ऐसे स्टॉक है जो 20% से ज्यादा करेक्ट हो गए. मिड कैप में 150 में से 50 ऐसे स्टॉक्स हैं विच इज वन थर्ड स्टॉक्स which have corrected more than 20% or so. So these are stock level drawdowns. Now these are the indices which are sorts of tracked by us. And I've not mentioned the sectoral indices here because we have bank, IT, financial services, metals, etc. Lot of these new age consumption, etc. But we have not mentioned a lot of sectoral names for the because data वहाँ पे properly दिख नहीं पाता. We already talked about them. So again, if you look at at funds, how they have performed in last 6 months or so. So Nifty is down 6 month 12। तो मैं पहले मैं 52 वीक हाई से फॉल की बात कर रहा था। अभी मैं सिर्फ अभी 6 मंथ यहाँ पे बात कर रहा हूँ। 12%, नेक्स्ट 50 इज डाउन 24%। यू कैन लुक एट आई विल टॉक स्पेशली अबाउट अल्फा डाउन 29%, small mid quality down by 27%, low vol which is supposed to be very sturdy is down only 13%. I'm saying only 13%, but yeah, it is down more than Nifty 50. But if अगर आप large cap से compare करोगे तो less. It though low vol is something which we have already talked about. It typically performs relatively better, falls typically less in these volatile scenario. Having said that, इसीलिए मैंने यहाँ पे 6 महीने का डेटा रखा है, एंड दिस इज नंबर एज ऑन टुडे, right? And we have seen so much pain in the market in last 3 6 months, but look at the 5 year data, right? The segments which have corrected the most, you'll see, are the ones who have generated good returns. If you're looking at 5 year 7 year number, yes, this pain may persist for next quarter or so. We might see Nifty falling by, let's say, a 5% more, or small cap mid cap falling by 10% more, but 5 year numbers will not materially change, right? It will change by 1 2% or so because it's a CAGR number. But then आप देखिए wealth creation कितना हो रहा है, हुआ है. We are talking about small cap which is down by 23.6%, but in 5 years it has generated 24.4% return. 24.5% return in last two. So it's a huge CAGR number, right? 3 year also it has given around 16.8% return. Even when you're looking at something like let's say an Alpha 30, which is down by 20, almost 30% or so, has given around 22.3% return in last 5 years. In 7 year also, after this 30% fall, it is given 17% return compared to a 12.6% of Nifty 50. So what I'm trying to say is that because of this correction, segments have not become bad, right? As we have talked about always, that this year will probably be a best year for accumulation. Invest in this year in a staggered manner, spread it out over a 3 6 9 month SIP in segments which fits your asset allocation, which fits your risk profile, and then look after 5 years how much return your investments in 2025 would have generated. And that is what we should look towards, right? If you ask me, I am a bit of a contra investor. I'll rather probably start looking at investing in mid and small caps in a staggered manner with these corrections which are happening right now, right? These levels will start providing a good entry point this year. And I think if not today, probably 5 days, a month, 3 months down the line. And I think since you can't judge when the market will actually be its lowest, you should do it in a staggered manner and do it in segments which align with your risk profile. If you feel that you can still take the volatility of Alpha 30, please go ahead and take those investments in Alpha 30 and take invest in these dips, because Alpha 30, even after going down by 30%, the 2 year return remains around 30% or so. And these, while our product has been in the market since last 1.5 years, you have a momentum 30 product which is there in last 4 5 years, very similar product. You can see the performance which that has generated in last 2 3 4 years. So these are the dips which have happened in the market. Yes, it has been painful, but it provides you a good entry point. Again, looking at gold and silver, we see a 6 month performance of 18.3% and 9.9%. A fantastic 5 year performance. Gold ETF and silver ETF, and especially gold ETF, is a very powerful tool to invest in these precious metal. Please invest in gold ETFs and silver ETFs for the sake of asset allocation. I think gold is retracted a bit. It's roughly around 28,060. 2,860, sorry, in dollar terms at LBMA. It has detracted from 2950, which it was. INR terms also, it has corrected a bit. So in gold, please invest whenever there is correction, and try to accumulate units, try to make it a form of your overall portfolio. Lastly, just see how well international markets have done and how much it matters to do international diversification also. When we launched those FANG top 50 Hang Seng products a while back, we talked about that it's not always India which will perform, other markets also perform. So there are a lot of investors who have invested in our domestic products. There are investors who have invested in our international products, and the person who have invested in both will see these sort of diversification benefits playing out when your FANG is giving you a 21% return when Nifty is down by 12%. Top 50 is giving you an 11% return when Nifty is down by 12%. So now you can obviously not buy these ETFs in fund of fund because of RBI and SEBI restrictions and the fact that they are trading at a very significant premium on exchange. But just illustrating that diversification helps. If you remember, 3 years back, FANG was trading at a negative 20, 30, minus 20, 30%. We launched at NAV of 14, 48, 49. It gave a NAV of 36, right? So almost 20%, around 20% correction, right? People who invested at those dips because the companies remain strong, portfolio remains strong, actually sorts of created wealth, and that is what is important, right? Identify the right time to enter into the market. If you like the valuations, start investing in a staggered manner. Again, these are the valuations which we are talking about. As I mentioned, take it with a pinch of salt, because the index underlying changes, and that is why the PE may not be comparable. Current P may not be comparable with historical 10-year, but still, having said that, Nifty is around 18.5, which is at a 3% discount from its 10-year average. Next 50, I'm not very sure about the numbers. So again, because it has now become a PSU heavy, etc. So that's why PE looks on the lower side, but I so you may discount that, but apart from that, mid cap at 28.4, small cap at 21.1 have now started coming around where the fair valuations are. We already talked about the other segments like IT, bank, etc. Bank being available at a significant discount, and so is the financial services compared to its historical averages. Having said that, just look at the international segments, right? Nasdaq is trading at a 20% premium. S&P 5 top 50 is trading at a 21% premium. Hang Seng Tech and Hang Seng Index is still trading at a discount despite correcting significantly in last 6 months. Last 6 month, Tech has run up almost 63%. But just look at a 7-year number, it's almost 5.2. So they are still recovering from a significant drawdown they had in last 2-3 years, and it seems like rally may continue from a valuation point of view, which HS Tech around still at a discount of almost 26%, and Hang Seng around a discount of 5% or so. Yeah, so two products where I'll be talking about from an attribution point of view. First is Alpha and second is Next 50. Reason being that these are the two products which obviously have corrected significantly, and this is the entire portfolio of Alpha, right? And what I've done is I've just jotted down of the drawdowns which has happened in each of these stocks and their weightage in the portfolio. So Zomato is down by almost, sorry, 27%, has the highest weight in the portfolio. Dixon is almost down 26%, almost 5% weight in the portfolio. Then comes Oil India, 55%, again 5% weight in the portfolio. PB Fintech, Trend, Then comes Voltas, Kalyan Jewelers, OFSS, BSC, Vedanta, Bharat Electronics, Persistent, etc. So if you are looking at the numbers, right, because this is a momentum product, right? So it captured stocks which were doing well, and when the cycle turned, these are stocks which have corrected the most. In fact, I can probably count on my finger the number of stocks which have fallen less than 20%. It is Indian Hotel, it is Lupin, it is Bharti Airtel, Torrent Pharma, and Interglobe Aviation. So only five stocks have fallen less than 20%. None of the stock has fallen less than 10%, and that is what is obviously affecting this particular fund. It is just the change of the cycle when momentum story which was going on has been suddenly halted, and the stocks which were running up significantly have started correcting a lot. So, for example, again, putting out names like Hindustan Aeronautics Limited, names like BSC, etc., which had run up significantly. IRFC, which is down by almost 51% from its 52-week high. Now, point is that again, like I mentioned, that over next few months. Alpha has corrected, and that is where you'll get an okay entry point to enter into this fund. Having said that, the volatility of this product and any momentum product in the market will continue to remain high. That is how momentum is supposed to behave. If you want to have a stable product, please invest in Nifty 500 multi cap, which we have, or a Nifty 50 or a low vol 30, which we have. If you want possibility of higher returns, willing to take higher risk, then only invest in products which are based on momentum philosophy, either on the passive side or on the active side. And like I mentioned, Alpha portfolio is going to change because NSE is going to announce changes in the portfolio as part of March end rebalancing. So a lot of names which have corrected significantly may go out. Some of the new names will come in, probably will come to know in next 15 days or so, and that shift may be significant. Like we typically see that typically around almost around 10 stocks or so get changed in the portfolio, and that can happen with Alpha. Having said that, that investing in a staggered manner in a product which fits your overall asset allocation is something which you'll find very attractive, and I suggest to do that in 2025. Now this is next 50. Again, a similar story, that lot of stocks which and if you have any question, please write in the chat box, and I'll be happy to answer. If you have any suggestions for next session also, I'll be happy to talk about them. Now, again, at the next 50 level also, just see the stocks from a highest allocation to lowest allocation. You'll see that it has the best stock, the large stock is Zomato, down by almost 27%. Then you have Interglobe, TV Laboratories. I think Interglobe is one of the reasons why now Next 50 is not doing so bad compared to what it was doing a while back, right? On a YTD level, it is only down by 1.9% or so. Divi Laboratories, Geo Financial is down by almost 49%. Vedanta down by 22%. HCL down by 43%. You have Motherson, Samvardhana Motherson down by 44%. Adani Green by almost 63%, and Adani Energy Solutions almost 51%. So a lot of these stocks, like I mentioned, that a lot of these new age companies, PSU names like PFC, REC, HAL, etc. And plus, a lot of these Adani names have corrected significantly in these last 3 6 months, which has what has reflected in the next 50 performance. The next 50 always remains like a very volatile large cap product. In fact, its volatility is, if I remember correctly, is more than a mid cap, right? Because it sits in that zone. So next 50 has been like that. Again, there are changes which are happening in next 50. We'll talk about it at the end of the call. And again, what we have seen historically, whenever it corrects, whenever the valuation gets attractive below the 5 year, 10-year average, that is when the best time is to invest in next 50 also. A couple of important slides, because I have talked about index performance also. Now let me quickly talk about two, three things which has resulted in these significant drawdown. One is FII holding, right? And what I've done is I've plotted the FII flows on a monthly basis since January 2020, and the that you can see in the orange bar. I've also drawn a 6 month trend line. So what is trend line? कि पिछले 6 महीने क्यूमुलेटिव बेसिस पे एफ आई आईज की पोजीशन पॉजिटिव हो रही थी कि निगेटिव हो रही थी, राइट? सो मतलब अगर आज निगेटिव दिख रहा है ऑलमोस्ट 1.5 लाख करोड़ के आसपास, जो आप ये राइट मोस्ट पे देख सकते हैं, मीन्स कि पिछले 6 महीने में उन्होंने क्यूमुलेटिवली 1.5 लाख करोड़ के आसपास का इक्विटी बेचा है. दिस इज ओनली इक्विटी. सो यू कैन सी दैट एफ आई आईज have done selling earlier also. For example, just look at the period from October 2021, which you can see here, to July 2022. See continuous selling by FIIs, but it had never happened in such a sharp manner, right? For example, just look at October 2024, where almost 1,90,000 to 1 lakh crore was sold on a single month. And also then again in Jan 2025, when we are almost looking a shy of 80,000 crores being sold in a single month. So while FII selling has happened, you can see a good period of almost 3, 6, 7, 8, 9 months where every month FII was negative. It was never so brutal in terms of selling what we have seen in October 2024 and January 2025. And yes, you can see a dip here also in 2022, this 6 month trend line, which was because of this accumulated selling. But here the trend line has gone negative very, very quickly and drastically, right? So FIIs have pulled out almost 12.1 lakh crores in last 2.1 lakh crores in last 5 months. FII holding is now sorts of down to only 16% of the market, which is a decadal low. Peak was around 20%. So from 20%, it is down to almost 16%, which is a decadal low in terms of FII. So while we can never say when FIIs will turn positive on India, but I can point out three things, right, which is material, three, four things that from an allocation point of view, FIIs are at decadal low. So how low more they can go. Second is that valuations in India have now started appearing to be somewhat reasonable, right, even in mid and small cap space. Third is that China has seen, it seems, a lot of investments from FII, but it has run up significantly. How much more China can attract? Yes, from a valuation point of view, China still looks more attractive than India. And I think fourth is obviously the strength in US market and strength in obviously US yields. From what market suggests right now is that we only foresee 2 or possibly 3 rate cuts this year. So I think a lot of conversation around FIIs will revolve around answer to all these 4 questions. I think one very important slide is, I'll try to now wind up quickly, is is also the corrections which has happened in Nifty 50 is in tandem with how earnings downgrade has happened, right? Because एक तो है कि FII पैसा निकाल रहा है, possibly because US yields are higher, they are going to China, etc. But also one very important thing is that earnings have taken a beating in India, right? Earnings खराब आई हैं for it came bad for September ended quarter, and even for December ended quarter, it just met the modest expectation. Expectations were already poor. It just met the expectations. The earning growth expectation for FY25 this year is in a low single digit, right? And that has obviously ruined the sentiments around Indian equities. And as you can see in this chart, थोड़ा सा complicated है, but I'll try to understand. This white line is Nifty 50, right? And you can see from what वो यहाँ जहाँ से given है, the bottom line, this blue line is Q4 के earning estimates जो आ रहे थे, which is December ending. Then March ending इस calendar year के जो estimates आ रहे हैं. Then this is the orange line. Then comes अगले क्वार्टर की, उसके बाद वाले क्वार्टर की, उसके बाद वाले क्वार्टर की. So this is Q4 ending, which is calendar year 2024 ending. Then March ending, then June ending, then September ending, and December ending 2025. So what this chart is showing is that Nifty was rising, right? And ये 24 से है, 24 से बढ़ रहा था, there was a dip around election results, and then बढ़ता गया. And since the earnings have started coming down, see, it peaked just before September. And since the earning have started coming down, see, your earning, which was for December ended quarter, their earning expectations started coming down, right? Same the earning expectation for March ending quarter, for June ending quarter, for September ending quarter, and for December ending quarter has come down reasonably. I think in the range of, let's say, almost exact numbers, but in that range. And you see that Nifty has also sorts of started correcting, right? And you see a significant dip in Nifty 50 also, which is corresponding to poor earnings which you have seen for September, as well as meeting the modest expectation which you have seen for December. The upgrade to downgrade ratio is only 0.3. It means that for every earning upgrade, 3 companies have got downgraded. So that tells you that earnings have not been good, and that is, I think, one of the key reason why Indian markets are not doing well. Very quickly on the passive side, now I won't take much time. The inflows continue in last 3 months and 6 months. This is also very important to know where the market is investing, right? In last 12 months, we had seen significant investments in Nifty 50, in Smart Beta, in commodity. 1,48,000 करोड़ में से 57,000 crores were in Nifty 50, right? You can see this number. Then in Smart Beta, almost 23,000 crores. Then in commodities, almost 22,000 crores. Then Sensex, etc., etc. Now, in last 3 months, the story continues, but has changed a bit. That we are seeing a significant rise in sorts of investments in the commodity space. So commodity, in fact, for last 3 months have seen more inflows than what Nifty 50 has seen. So ETF has seen almost Nifty 50 ETF 2,000 crore, index around 5,000 crores, total around 7,200 crores. Commodity itself, gold plus silver, has seen almost 7,400 crores of inflows in the on the commodity side. So that's one very stark observation. It makes sense also that in market turmoil, people typically flock towards gold as a safe haven asset, and that is what we are seeing. Also, a lot of inflows here come from multi-asset. From a trading point of view, trading remains pretty much the same. Past 6 months, the average trading has been around 17,1749 compared to 1701 in last 3 months. Liquid ETFs get most. Then comes Nifty 50. Gold, as you can see, has increased from 170 to 180 crores per day volume. Then comes BFSI, then comes silver, etc. So that is how the trading has also sorts of changed. Not so much. Only gold has seen a meaningful change in the volume. Lastly, these are the offerings which we have. On our side. So we now have almost 28 ETFs. We have three equity funds and four index funds also on the debt side. So we have plethora of options on the passive. We also have equity allocator fund of fund, which I feel is one of the most powerful fund to take exposure in a large cap segment. It does asset allocation in Nifty 50, Next 50, and Mid Cap 150 ETF based on valuations, and it has done quite well since its launch. It has a history of almost 4 years now, so it's a good fund. But Nifty 50, Mid Cap, Next 50, Multi Cap, etc. Then we have all these smart beta offerings, sectoral offerings, etc. Now, if you ask me which are the funds which I should invest, I think, like I mentioned, that you should first look at your risk profile, look at your investment horizon also, because as I mentioned, that this is an year of accumulation. You should invest, and hopefully your investment will yield good returns when you are checking the wealth creation which your 2025 investment made in, let's say, in 2030 or so. But having said that, I think if I have to pick product, Nifty 500 multi-cap 50 25 25 is a very good product on the ETF side, because it invests in large cap 50%, 25% in mid and small cap each. So it gives you participation in the entire large, mid, and small cap space. Then equity allocator fund of fund is something which is a very low cost product, does allocation in large and mid cap space based on valuations. Again, if you are looking from portfolio allocation point of view, gold ETF, we have a lowest cost gold ETF, so you can look at that for portfolio completion, for taking exposure in one of the best wealth creating asset since decades, if not centuries. On the smart beta side, if you want to have exposure to a product which has higher allocation towards let's say defensive segments like healthcare, consumer, etc., and is relatively stable, then look at low volatility 30. Else, otherwise, I'll suggest that use mid small cap 400 to buy at dips. I'll suggest alpha 30 only after we look at what the NSE changes has been in terms of portfolio, which is going to be changes which is going to be announced in next 10-15 months. I think in the next call, then I'll review and suggest what to do with alpha 30. But mid and small cap 400, you can do allocations in a staggered manner if you want to take that multi-factor call, a product which is based on both momentum as well as quality metrics. From a sectoral point of view, I think, like I mentioned, that I like personally financial services trading at a lower valuation, as well as has been a bit more sturdy, and also now it has corrected a lot new age consumption with government announcing tax cuts. India anyways shifting towards discretionary spending in a significant manner. I think new age consumption ETF as well as fund of fund will provide you exposure to the companies which are which are part of discretionary consumption. So it won't have exposure towards FMCG, paints, or auto ancillaries, etc. It will have exposure towards consumer services, reality, tours and tourism, e-commerce, etc. So a very different, very unique way to take to participate in consumer discretionary story of India. So again, very quickly, Nifty 500 multi-cap, equity allocator fund of fund, new age consumption, gold and financial services ETF, and mid and small cap 400, and Nifty 100 low vol 30 if you want to take exposure, basically in a more stable portfolio with lesser volatility, are some of the few products which I like to highlight from this basket for for allocation currently. As I mentioned, that look at 2025 for staggered allocation, looking to create wealth in the long term. If 2 3 years back you were so bullish to invest at reasonable valuation, or rather higher valuation, because you believed in long term story of India. I think now with much more reasonable valuation, you should look forward more towards investments and good levels. So that's it from me. If you have any questions, I don't see any questions, but if you have any questions, please send it across to us through social media channels. If you have any comments, so thank you for joining this webinar, and for your time on a Monday. Please take care. Have a great week, and hope to see you soon next month, again on the first working day, when we'll be again doing the market review and talking about few of our products in detail. Thank you and goodbye.